Going to talk about Bitcoin and cryptocurrencies in relation to being a hedge against inflation. Now, when the world economy is such in a helter-skelter kind of scenario with all the inflation, people are pressed for money. They're spending their money on gas. They're spending their money egregiously on living expenses. I'm seeing deodorant at $6. $6 per deodorant stick in Walmart. It's just shocking kind of like prices. I saw one picture of Spam. I didn't personally see this, but it was like there was a can of Spam for like 12 bucks. Just kind of like stuff just kind of getting out of control, supply chain issues, all this and that. And so there's bigger worries than kind of like playing around with these digital coins. You have a real estate investor who's losing their ass on their rentals and has bought in at the wrong time or can't cover the mortgage because so many people weren't maybe paying their rent, or maybe various other things that can destabilize kind of their situation on their real assets. And suddenly they've got to sell the digital coins if they had any, or they're not really looking to buy the digital coins. So it's all a timing thing. Now, is there enough money in the world that some people are going to be attracted to retake positions in crypto at a certain point? Yes, but that gets extended out. There's enough people for a period of time. When this stuff long tails, what's the reason for it to long tail? Because it's a balance between the buyers and sellers. There's still people getting pressed out, but there's still people that are willing to kind of take the chance and buy in at certain points, and then it's just flatlined. It's just kind of in this holding pattern, and it's just trading within a channel. So you can have that go on for years, whether that be in real estate, or whether that be in stocks, or whether that be in cryptocurrencies. Now, we've seen it more in real estate and more in crypto than we really seen it in the stock market. A lot of this situations happen in the stock market the last 10 or 12 years has been pretty much up and to the right. Now, at this point, after today's decline, the S&P 500 is pretty much backed up clear to where we were at January 1st of 2021. It's lost that much of its value. And just think of those investors that just took that bath. Are they looking to buy digital coins or maybe a pixelated ape or something like that to be a part of a club that really exists nowhere, or very, very in a light situation? The likelihood is they're not. They're not really looking to buy that when they're getting pressed out in these other ways, and they're getting kicked in the teeth buying gas. Just filled up the tank on the Bentley, and that was $130 because 91 octane out here is pretty much like $6.60, almost to $7. Why are gas prices going up? I can go on and on about that, but at the end of the day, that's pressing a lot of people. They can't hardly move around. They can't move around. It's like, well, how much do you have to earn hourly to kind of make up for this? And the number starts to get higher and higher and higher. And what's going to happen? I'm going to tell you, the Democrats, they're going to push for $75 an hour minimum wage or something. It's just, again, it's this never-ending thing. You print more money, you create this big problem, everything's so expensive, and then it's like, well, we need to have a living wage, and we need to up the minimum wage, and then the number just goes up and up and up and up. And the issue is 40% of the money in circulation has been printed in the last couple years. It's pretty shocking. So when it relates to some of this rarity and something being a hedge against inflation, again, it's cryptocurrencies are in a very, very weird place because it's a super speculative investment. 98% of cryptocurrencies is just speculative investment. And while yes, it is useful for the future, and there's great things about it, I think that most people should really just kind of look at it as this alternative investment that they're able to get in with the right timing, ride that up and then parlay it into real world assets, whether that be the vehicles, whether that be properties, whether that be experiences. And a lot of people don't do that. They get too greedy and they're like, this is going to be the future, this is going to be the future, this is going to be the future. And that's what we've been saying for the last 10 plus years. That's when I got in 2013, that's exactly what I thought. I thought the exact same thing that probably you thought when you got in, whether you got in 2017 or you got in 2018 or you got in 2021. probably thought the same thing. Oh, this is the future. It's going to take over. It's going to take over. Crypto's taking over. This makes sense. But it never moves as fast as you think it's going to move, and it goes in its own little life cycle, its own little boom and bust little, cycles that partially revolve around the halvening, every 4 years for Bitcoin, the block reward halves. And so that pushes part of it, and then after a certain amount of time, the sellers have been pressed out over years, then it's ready to go again, because it's mainly the buyers are left. And then once it starts to go, then FOMO takes over, and then it gets explosive. We go into a depression. The crypto is going to be the first to go. People aren't really going to have the money to allocate to it. That's kind of my thinking. So I think it's just going to be held down for, potentially a longer time. Now, I don't think you should get caught without it. I think it should definitely be in your portfolio, but other stuff can, come and go as well, in your portfolio, whatever makes sense to kind of jump to. Personally, I just don't think that precious metals are really kind of an area that are that enticing to me anymore. I think that ship has sailed for the most part. That's kind of something, that was kind of from the past. Crypto's superior to the precious metals for the most part, for multiple different reasons that I've talked about. I don't really see that being a play. I think you're better off betting against the U.S. stock market right now than you are stacking large amounts of Bitcoin or Litecoin or Ethereum or any of that in the short term. I'm saying in the next kind of 2, 3, 6 months, maybe even a year. Litecoin's going to have an interesting play coming up because the halvening for it will come up next year. So there will be an opportunity to kind of play on that. There will be kind of a buy the rumor, sell the news kind of thing. So a month before the halvening, which will probably be around June of 2023, probably offload some of your stacks of Litecoin if you find some good buy points. And we're talking sub $40. I think we're going to see sub $40. We might even see $30. And that was pretty much on par with last cycle. Got some Litecoin at $25, some at $30. My average was around $30 last time. And then which falls again, pick up some, do the swing trade, move in, move out. Buy real world assets, buy yourself experiences, so on and so forth. There's no reward for riding the roller coaster all the way up, riding it all the way down. It's painful. So you don't want to sit this decline out in the U.S. stock market, and you don't want to completely miss out on buying stuff at discount prices when we do kind of like scrape along the bottom. You're going to have opportunities, but only if you position yourself. So at this point, like I said, we have reversed and erased everything that we've had in 2022 and pretty much everything in 2021 as far as the S&P 500 goes. And I see a long way it could fall. It could fall another 30 or 40% from here. Just do not see things getting better. And as things get worse with the stock prices, companies clinch up more, people clinch up their spending, and they're getting eaten alive again by the gas prices and stuff. So I don't really see crypto as necessarily like a hedge against inflation until we really get bottomed out. We're talking like if we do have this scenario that we do go below 10K on Bitcoin, then it's too enticing. People will find the money to buy at that point, and there'll be enough people that are able to hold. But you're going to have some of these big players get liquidated, like Michael Saylor. He's been a proponent of Bitcoin, but like I've said before, he's a noob. And I've said it, you can go back through my videos, and I've said it several times that he was essentially, until he's liquidated, until he's ousted, we really haven't seen the bottom. With the NFT market, you have floor level, the Bored Ape Yacht Club at $106,000. That's absurd. And there's 10,000 of those. That's absurd. You need to see, this thing just collapse down to being worth floor level, 10 or 15K, maybe 20K. It has to really collapse to where people who thought they were rich are no longer bragging or really kind of touting that their club status. So things have to get a lot more painful for us to really see the bottom. Anyway, guys, please like this video. That is free to do that. Subscribe. That is free to do that. The gas money is not free. Gas is not free. Gas is not free, guys. But follow me on all social media at Brian Phobos, YouTube, Instagram, Steemit, Twitter, Hive, etc.